market update for 2022. The next time we'll be coming to you will be in 2023. So this is our final one for the year, where Lachlan Turner and myself reflect on what's happened in the Adelaide property market over the last quarter and what can we look forward to moving ahead. So how are you, Lockie?
Very well, thank you, and enjoying the warm weather finally. So we'll see what effect the weather has on the market as well. Normally, as the weather gets a bit warmer, the sellers do tend to get a bit more active, and I think they are, but it's been a very slow start so far to spring.
Yes.
Because as we know, the sellers are the ones that hold the stock or the property, so we need them to be active. I know there's a lot of buyers out there that are just hanging for a bit more volume in the market. So, but look, I think it'll come, but it's certainly a slow start so far.
Yeah, well, it's definitely nice that the warmer weather's coming, and it would be good to see if that brings out more stock. But what has been happening in the property market over the last quarter? What have we seen happen in Adelaide and nationally, and how do we compare on the national standard?
Well, we compare on the national stage incredibly well. We are of all the states, we are the strongest by a mile. So I think Sydney's gone down about I think Sydney's gone down about 8%, 9%, Melbourne 4 or 5%. Many of the others 2%, 3%, so on. But Adelaide's basically just stayed even. I think 0.1% for the quarter.
And that was an increase, wasn't it? So it's still slightly positive.
No, that was a slight. That was down for the first time, but basically even. I mean, it's ridiculous.
Yeah.
So nationally, we're doing very well, and we're also doing really well with options, which is a really, really strong indicator. So the clearance rate, so they're the properties that actually sold at auction or before auction last weekend. For Adelaide was at 86%.
Wow.
Now that is incredibly high.
Huge.
That's like, boom market. You're getting up towards the 90% range, and that's sitting at about sitting at least 10% of one state, 20%, sometimes 30% higher than most of the other states.
Wow.
So what does that say about Adelaide? It's absolutely amazing.
So that's really, just to put that in English or simpler terms, does that mean obviously the demand is still really strong?
Yes.
Because if we're getting auction clearance rates at that level, would you say that demand is still outpacing supply in?
Certainly in Adelaide it seems to be. Certainly in Adelaide it seems to be. I think also what's happening right across Australia is that the drops we've seen in value, particularly in the eastern states, have really started to even out now. And you're the interest rate guru.
Yes, we'll talk about interest rates.
But everyone was expecting last week and the week before it to go down 0.5%, but only went down by a quarter. Yes. And I think that's a very, very strong indicator that things are going to start to settle and people can see the light at the end of the tunnel of where it's going to go. So I think the drop has ended. It's just starting to flatten out now.
Yeah.
And people can see that. But Adelaide really hasn't been affected either way. It's still just running even. So I think into the future, which is what everybody probably wants to know with property, is that in Adelaide, prices will flatten.
Yep.
And I think it's just going to be a bit of a static market for a while. And then I think, frankly, it's very likely that coming into next year, maybe mid to later next year, we could see a little bit of growth coming back into it again. So
what do you think is going to drive that growth? Like, would you say, because we haven't even opened up to international migrants in the way that we were pre-COVID as well. Could that drive some of the growth, or where do you see some of that future growth coming from in the Adelaide market?
The demand is there, and it's here right now. And the only reason Adelaide has softened is because of interest rates, and everyone's gone, whoa, where is this going? Yeah. But with the smaller increase in interest rates than that was anticipated, I think people are already starting to see, right, I can see the light now. Yeah. So I think the demand has always been there. It's just been sort of slightly stifled because of interest rates. Yeah. But I think when people get their confidence back, they see that perhaps the RBA at some stage, probably early to mid next year, don't even do a rate rise. Yeah. That's when I think it's probably going to start to turn again. So long term as an investment, property is outstanding. I would certainly be buying this year or next year, and I don't think it's going to come back. Yeah.
Look, I've probably got, I've got the same opinion of you, and I actually think that increasing interest rates actually, in a little way, will help Adelaide property market move along even further. The reason for that is because as interest rates increase, borrowing capacity is reduced, and what that means for interstate investors is that they may be pushed out of their own markets to invest. So then they start looking for cheaper markets to invest into, and obviously, Adelaide's a really great proposition for them with really great rental yields. where if they can't buy an investment property in Melbourne or Sydney, they're probably going to be able to buy an investment property in Adelaide, which will push up demand in Adelaide for investment properties even further. So there could be some really great things that come out of those rising rates.
Yeah, it certainly makes sense if you're an investor. I think, it is still an excellent market. The yields are still very good. So if we quickly get on to rents, the rent yields are still increasing.
Yes.
Although, like the sales market, they're probably going to start to flatten out a little bit now. But in terms of national affordability and the median price of Adelaide, we're still the second cheapest in the country behind Tasmania, I think is my understanding. Investors look towards Adelaide, and I think that is one of the other things that is still keeping the demand for Adelaide houses and units up.
Yeah, and I guess, your team out in the market and with rising interest rates, how much has that been a reason for people to sort of hold back on their buying decisions? Has that been something that's talked about out in the opens and things like that? Are you getting a real feel that has caused people to just sit and pause for a while, or what's the general consensus around that?
Yeah, I think certainly when the interest rates were in the early stages of rising, buyers thought it's kind of turned a little bit more into a buyer's market.
Yeah.
And this is a good thing. And now I'm going to play it cool. I'm going to go to a property. I'm not going to be feverish in my interest. I'm going to hold back a little bit. I'm going to play the game. And there has been a bit more of that. So in fact, the time on market has increased during COVID and the exponential rising values of property. It was about 15 days on market. It's pushed out to 30 days on market.
Which is still pretty good, isn't it?
That's the national median average, by the way. And of course, the different types of properties, the time on market is still quite different. Yeah. But we are seeing owners that still want prices during COVID, and it has come back again. The median average is 3%. Yeah. So there's just a little bit of a change. But I think, again, that's just right now. Yeah. As the market changes, and if you predict the future as best as possible, as we've just been saying, there's a likelihood that it might sway back towards the seller's market a little bit at the moment. So it's probably a nice little point in time for buyers to be very active if they're not already. I know many are extremely active, but to get in,
Yeah, so I was going to just move on to advice to buyers and sellers. You've already given a little tip of gold there. For buyers, now's really the time to get in, and because it's probably not going to go down. We're not expecting to see prices to go down in Adelaide. Do you have any other tips for buyers, and then we'll move on to some tips for sellers?
Well, what we're finding a lot is when we talk to people is trying to, what we call, push them through the pipe for their own sake. Is that everyone says, oh look, I had these plans. Yes. Okay, I want to sell, I want to buy, I want to change my life. Yes. And but it's hard to sell and buy. There are obstacles. So a tip would be, think about what the obstacles are. Is it to the presentation? Do you want to get access to tradespeople? Yeah. Do you need to fund that? Well, Turner, yes, we sell property, but we have a facility, which is a third party, which we can help raise money to help fund these sorts of things. Because of the property management part of our business, we've got hundreds of trades. We call it a legion of tradespeople that can help people. Yeah. It's very hard to get them at the moment. The waiting lists are long and those sorts of things. But mainly what we're finding is finance. Yeah. So some people don't quite know where they sit. So we often refer them to your team, Marissa, and say, look, get some pre-approval, get like a bridging finance. And the other thing is because of our rental business, and we're doing a lot of rentals just on Turner Real Estate now, is like you don't have to buy straight in. Maybe rent for 3 or 6 months or a year and save up, look around, but make sure you've sold your house, cash is in the bank, got your finance sorted out, and then you're going to be a much more competitive buyer. Yeah, because you can buy unconditionally as well. So there are a few tips. Yeah, no, that's really, really good.
And in terms of the rising interest rates, we'll talk about this for a moment, because obviously rates have risen quite a bit over the last few months, and like you said, initially it caught everyone a bit off guard, because even though we knew rates had to rise because they were at such low levels, the Reserve Bank went so aggressive. The increases initially were so big, more than we were expecting. But like you said, Lockie, now it's started to taper off, and that's a sign to us that we're starting to get close to where that new normal interest rate's going to sit. We're probably not there yet. There's probably a few small rate rises to come, and the Reserve Bank are just sitting back and watching. Inflation across the country is still a big issue, so that's what they need to get on top of, and that's, but I think, like, you're right in terms of there are people sort of sitting back and not buying because they're just wanting that
certainty.
They're wanting that certainty, and they're just wanting everything to stabilise, and I feel like we're getting closer to that point now.
Well, definitely. Well, I've been in the industry for 19 years, and I've been through, the GFC, which was an extreme market. I've been through COVID now, and what I find with anyone with sentiment is they just want certainty.
Yes.
And I think we can already see it with a 0.25 basis point and not 0.5%. And as you say, a few more rises, but I think people have got the confidence now to see that roughly where it's going.
Yeah.
So I wouldn't be holding back too much. I don't think as a buyer your leverage and your negotiation skills are going to be too strong for very long. I was actually thinking it might dip quite a bit, particularly if the RBA is going to be more aggressive.
Yeah.
And then it would certainly turn into a buyer's market, but it still
hasn't really happened.
So if we talk about what market it is, it's, I think, still a seller's a little bit. Simply, especially for houses, because there is such demand, just so pent up for people that want freestanding houses on land in anywhere 5 to 10 k's in the city. Now I used to say 5 to 7, but probably 5 to 10 k's because the affordability through COVID has sort of pushed everyone out that extra 3 to 5 k's now. So anything in that basis, and of course coastal is very high demand.
Do you think there are any pockets of really good buying opportunities in the Adelaide market right now? If so, what do you think they are? Yeah,
well, I've been sort of saying for a year or more. I think down through the coastal region there, so Callip Cove, Noarlunga, Christie's Beach, Moana, and then all the way through to Salix Beach, Silver Sands. All through that region there on the coastal part of Adelaide.
See some good growth in those areas.
Well, I believe so, and there's lots of sort of mid-century houses built down there on the the bigger blocks that people just knock down. You can do a division and or keep it for a while on land bank. Also for buyer tips, I've said this a little bit before, and not everyone wants to do it, but a lot of young people just sort of want to buy something that they want right now and that they want to live in right now. But I would be seriously thinking about buying something that's just going to have great growth and rent.
Yeah,
you're in the market.
The rent investor.
Beautiful. You're in the market. You don't have to live in the house. You have to think a bit more laterally. You don't have to live in what you buy.
Yeah, that's definitely how I started my investment journey as well. Buying investment properties before you buy your house to live in. So I think there's definitely merit in doing that because a lot of people may not necessarily want to live where they can afford to buy. And I think from some tips around interest rates is to not be scared of the rising interest rates and just come and speak to your mortgage broker, and our team would love to help you as well. We can give you a free analysis of where you sit and what you can afford and how you can improve your borrowing capacity. So it's not something to be scared about. If you are currently a mortgage holder and obviously rising interest rates has impacted your cash flow, especially if you're an investor, that's really important for you to keep on top of. So once again, it is probably a good time to review your loan and make sure that you're getting the best deal possible, making sure that your interest rate's still competitive, even despite the rate rises. And you've started it.
So I might say something, thank you, is that the people who had a pre-approval at the beginning of the year, their capacity to borrow has changed. So I think that is a danger. And especially what we're seeing, if you're buying a property and it's subject to finance, and your circumstances have changed because interest rates have risen. Like you might have been able to borrow 500, but now you can only borrow 450. That's a danger.
Right. It is definitely a danger. So that comes back to your point that if you're looking to buy, you probably want to get in sooner rather than later because as time goes on, if interest rates continue to increase, then your borrowing capacity will continue to reduce.
So you want to
you need to
lock in your approval at a higher rate of borrowing and then get into the market.
Exactly. And when we assess your capacity, we assess it at a much higher rate than what you actually be paying. So even with those future interest rate rises, they're already built in. So affordability won't be an issue, but it's really important to not procrastinate, like you were saying.
Well, we're here to help try and move you through the pipe, everyone. And there's lots of different ways that we can do that because it benefits you, it benefits us, and it just keeps everything moving. So we focus on that a fair bit with our clients. We don't just turn up once the photos are taken with a brochure and we're there with you. the whole journey if you're selling. So, and there's a lot more to it than what we do. And I'm always trying to tell people that, because sometimes think agents don't do those sorts of things, and actually many of them don't. But we're there right from the beginning.
And over the last 12 months, there's been a huge demand from tenants, and vacancy rates have been incredibly low.
Yes.
Are you starting to see that taper off, or is that still really strong from the property management side of things?
It is still strong. I think the reason there's been a little bit of, I think the reason that at the time of market for sales there's been a little bit of a discount in values, like the 3% value, is because you're dealing with both landlords and people that own property, what we call vendors, that have expectations that are still quite high from COVID, and and the values are mostly still in the properties for rent and sale, but there has just been a slight turn down at the dial.
Okay.
I mean, if 10 was the highest, it's probably turned back to 8 or 9, and so sometimes there's just a slight extra time and adjustment to get there. And rents are the same. Sometimes our landlords are going, all I read every day, which is true, the media is blah blah blah, and rents are this, and everyone's homeless. I want a piece of the action. I want to increase, which is fine, and we're certainly getting increases, but there's a limit to that.
Yeah,
you can't go crazy and get another $100 a week, maybe 20 or 30.
Yeah, and you've got a new offering with your property management services as
well. Yes, well look, it's more for the higher end of the market. We already manage about 35 properties, sort of that are very much at the higher rent end, sort of that 800, 900 and more per week.
Yeah.
So the prestige part of our business has been launched. That's just for property management, not for sales. It's not to say we don't sell beautiful properties as well, but it's a niche offering in the market. Lots of agents already have very good brands for selling, but there is not a dedicated prestige brand and distinct service offering for people that own very high-end properties. So we launched that last week, and we've already put on 2 more properties through that exposure.
Awesome.
So if anybody has a beautiful property they need managed in the metro area in Adelaide, we've got a dedicated portfolio manager for those very high-end properties, and the service levels are quite different and distinct for that service.
Yeah, awesome.
Thanks for asking about it, Marissa, and for the plug.
Well, that wraps up our quarterly market update for today. We will be back again in January with the December quarterly market update, and we hope that you all have a wonderful Christmas moving into summer now, wonderful festive period with your family, and we look forward to seeing you again in January, and thanks for your support this year and for tuning into our property market updates. Thanks, and have a good one. Bye.
All the best, everybody. See ya.